Charge is back. I'm Erik from Develop, and with me is my colleague Louisa.
Hi, MC.
This week we're going to be talking about InsurTech.
Now, the fintech party has been in full swing for a number of years, but InsurTech have only just left pre-drinks.
We wanted to know why. So we brought in Erik Abrahamsson, the CEO and founder of Digital Fineprint, a startup bringing social media data to insurance.
Social media and other technologies could totally revolutionize the insurance industry to the benefit of both consumers and providers.
So we found out from Erik exactly what the revolution looks like from the inside, and why on earth it's been so slow coming.
Erik, tell us a bit more about what Digital Fineprint does.
Sure. We make it possible to link your insurance identity to your social media identity. So just like when we log into Spotify with our Facebook accounts to get music recommendations, or when we log into TransferWise with our Facebook or Google accounts to send money to our friends and see our friends, we make that happen for your insurance policy. So you can log in with your Facebook or LinkedIn account, or connect it to your WeChat, as we now do in Southeast Asia. And that way you don't have to remember your password, you get the right recommendation for your insurance needs, and you can even figure out what kind of insurance policy you would save money buying from the user perspective. Then for the insurer's perspective, obviously, we help them see what kind of customers they have, where they can grow in terms of their markets, how can they figure out how to do the right kind of marketing, what are their customers interested in when it comes to new products and so on. So we try to add value on both sides of the equation. For the customers, it becomes much easier to find the right protection, and for the insurers, we give them access to much more data.
Okay, and are you able to tell us how your product works?
Our platform is completely open-ended, so we can plug in any kind of social media account. So you can think of it as a multi-sided platform where we take in a lot of social media platform into that Digital Fineprint platform, so you connect an API between those. Then you start plugging in insurance companies, and insurance companies might be using our services for product recommendations, lead generation, marketing, or even giving more information to their agents so that when they have conversations with people, just like banks do, they can have more information about the individuals that they're talking to. So on one hand, you have the social media platforms that we clean, and then you link in the platforms for the insurance companies on the back end. That second part is often technically more difficult because let's just say that insurers are not the most technical friendly or digitized of industries. In fact, in the world today, just 1 in 10 insurance policies are sold online, according to Bain & Company. So there's a massive opportunity to help insurance companies move online and reach that remaining 90% of the market that's still happening offline. So to answer your question on how the platform works, most of the work we do is actually making that integration happening. So connecting the Facebook, LinkedIn, Twitter, WeChat data, analyzing it, getting insights from it, and then sharing those insights with the insurance companies in a way that their systems can actually understand.
So you say that only 1 in 10 insurers actually use what are sold through digital products, through digital means. Mm-hmm. So why hasn't this space been tapped into before?
Yeah, it's a tricky one. Personally, I think that banks only reluctantly got into the whole fintech revolution after the financial crisis, when many of them actually went into bankruptcy. But the ones who survived really started to innovate and digitize, and today we really see some amazing fintech companies helping banks innovate, like Monzo and others. But insurers never had that kind of waking up moment where many of them went into bankruptcy. They've been very profitable and they're doing a very important societal service for all of us. If we wouldn't have insurance, then society couldn't function. That being said, insurance by their very nature has to be very risk averse as an industry. Because of that, they're less willing to take risks on new technologies before they've been tested more broadly. So in contrast to more competitive and innovative industries like design, art, media, which moved online very, very quickly, and also music, books and other things, insurance is probably the last remaining frontier that still hasn't moved online. But that's just great for entrepreneurs wanting to move into a space because there's so much more things that we can do that's already been done in other industries.
So what kind of feedback have you had from these insurers when you've approached them?
It helps if you have some early wins, actually, and that's the main advice I give to entrepreneurs, that you always have to get your first client as soon as possible and start working using that as your success case. And for us, that became Allianz, which is the biggest insurance company in the world. So we started working with them in France and did the Allianz Accelerator program and was picked as one of the top 5 ideas for the InsurTech in the world. We then used that momentum to start signing up other clients here in the UK. So Hiscox became another one. Then MetLife picked us as one of the top 8 insurtech companies in the world. And after that, we signed up other clients, both in London, in Singapore, and now also in the US. So it became kind of a snowballing effect that the first one started saying yes, and eventually they all started coming in. I would say though that in the first couple of meetings, there was a lot of training and education, trying to explain what is social media data, what can we do, what can we not do, what happens if it goes wrong, how can we avoid things happening that when insurers themselves have tried this, they weren't able to do. Pretty quickly I then realized that social media data is so sensitive, it's so different, that they need expert help from an organization like mine or others to be making sense of the social media data that we can gather.
What would you say were the main challenges in persuading larger insurance companies that social is the way to go?
In a way, the business models of insurance companies have been attuned to their existing risk tables. Are you familiar with the risk tables, Nadia?
I'm not, I'm
That's
afraid.
fine. Imagine that you're an insurance company selling life insurance, and you keep selling to the same kind of customer demographic year after year after year after year. If you do that and you see that you can keep making money on that specific one, you're not incentivized to look at other customer demographics. That means that when you walk into a room and say, we want you to upend your existing tables and we want you to find new customer groups, they're not really willing to listen to that because they know that their existing business is predictable, not very risky to your point, and it has worked for them for such a long time that even big and innovative movements like social media is not going to influence it, they think. But then you can start showing them the actual data and make them realize that if they don't, somebody else will move into their existing market and competitors will steal it away. So it's a long discussion and a lot of training that's happening there.
What did you understand were the risks the companies saw in using social?
What other companies have tried to do has been to analyze what I call open social media data. We try to distinguish between open and closed data. Open is what anybody on the internet can get access to. So that's if you look through my Twitter feed and see me going to a party in Singapore and me holding a bottle of beer and then using that information against me when I'm making my claims against an insurance company. That kind of analytics I have big problems with. It's not ethical. It can create a massive PR disaster, and it has for many insurance companies. And it's going to be illegal to do it in Europe next year when the General Data Protection Regulation comes into play across the EU. But that kind of image of analyzing open social media was what insurers had in their minds, and that, of course, rightly so, they assessed as very risky. Everything we do as Digital Fineprint is about analyzing closed social media data on an opt-in basis. Opt-in means that each customer has to give their explicit permission and consent to share the data with the insurance company. So you have to click, yes, I want to connect my LinkedIn account to my income protection policy. Yes, I'm okay to share these data points. It's clearly been advised to me. And I do that with the full realization that the data will be used and analyzed. If you do it that way, you have the customers buy-in, you make sure they're not upset about it from a PR perspective, and you get much better data because the open things that we've been posting on Twitter or maybe Instagram is not very useful for insurance companies. So in the past, when you were looking at open social media data, it wasn't useful at all. Everything we do is about looking at the closed data, which is much more useful and valuable.
Have you found at all that people are uncomfortable giving that level of access to private data?
I think it depends. Sort of it is a generational question. It differs a lot by country, and it differs whether you just ask for it out of the blue and whether you can communicate a clear customer value and benefit from it. So if I was going to ask you right now, give me access to your Facebook account, you would say, no, why would I do that? Whereas if I would present you with a choice of either spending 20 minutes filling out an insurance application form, which was a terrible customer journey and you had no clue what data was going to be used for, and you didn't know how to answer half the questions, which is really what most insurance purchase funnels are, versus clicking autofill with my Facebook account, you would definitely click autofill with Facebook because you have seen the value in it. So as long as you can communicate the value clearly, then it's actually much easier to get the buy-in from them. And one exercise we often do with insurance companies is to let insurance executives buy an insurance policy from their own companies. And in 9 cases out of 10, they can't do it because it takes ages, because they don't understand the questions, because you have to sign up for an account before you can buy a policy that gives you an account, and it's just unbelievably bad in the way the state of the industry is today. And that, I think, is a big problem, because that means that especially millennials are not buying insurance policies that they need to cover them in case of sickness, in case they lose their laptops, MacBooks, iPhones, all these kind of important things. So we want to make it easier to give access to the right kind of protection that people so badly need, and we need to help insurers do that.
How do you think it compares to people who have started using bots and AI in comparison to this technology?
That's a good question. We'll keep it at bots first, and then I'd love to hear what you define as AI, because it's such a big term that we really don't know how to do it. Bots, I think, can simplify very simple transactions, and the research that's been done on bots is that they increase conversion rates only when there is less than 4 nodes that you can go out on. So buying flowers is great, you know what kind of color, how much you want to spend, and then click buy my flowers, and that's it. To buy life insurance, it's a much more complex product. There could be 100 separate nodes under all the decisions that you need to make. How many kids do you have? Where do you live? Do you want it to last for 10 years, 20 years? What is the right cover? Do you need it to be decreasing or increasing? All these kind of complex things that I don't think bots can answer today. If they could in the future, they would probably be so smart that they could read our brains and figure out when we're going to die in the first place, so you wouldn't be using them for life insurance. AI is a broader term that, as we define it, would be looking at unstructured data in an unsupervised way. And I haven't yet seen any use of unsupervised sale of insurance in the industry. And even if it was, that wouldn't be allowed by the regulator, because you always need to be able to point to, this is why I recommended this product to this individual. So what we use is machine learning, which is a subset of AI, if you will, where we build a decision tree and figure out all those nodes and then answer yes or no to a bunch of questions to get to this, which is on my screen, a life insurance recommendation. So to answer that question, bots probably too complex, but it has some uses, and AI is very, very broad, so it's hard to find it.
What do you feel that InsurTech needs to do to gain the trust of the consumer?
If you focus on the consumer side, like I said, it's very tricky, right? Because we're talking about very important policy documents that will be a big one to be using. But if anything, I think they need to do what has been done successfully in fintech. Have you tried Monzo? Have you been using that?
We are big users of Monzo.
High five for Monzo.
Yeah.
Tom, if you're listening, this is just outstanding. Just came back from a trip around the world, was using it in every country. It was just amazing. And when I compare that to using my old crappy bank that I'm going to change from, I'm not going to mention which one it is, TSB. It was just insanely much easier to be using the Monzo card with no credit fees, no FX fees, anything like it. So the experience was at least 10x better than using an old 200-year bank. For InsurTech to win as a proposition against old insurance companies that have been around for centuries, you need to be 10x better. So far, the only ones I've seen where it makes sense to have such a dramatic impact comes down to, for example, car insurance on the claims process. Right in them have been able to do a bidding system where if you crash your car, different workshops can bid to have your car repaired and immediately decrease the cost for you on your insurance policy, decrease the cost for the insurance company, and have your car back in like a day or 2 days. So it's amazing what they've been putting together, and it's 10 times better than anything I've ever seen from any other car insurance provider. So be 10x better, and then that gives you the trust of the consumer, just like I now trust Monzo when I'm using TraceBot.
What are the pitfalls? Like, what are sort of the things where you have to be cautious?
We started this company because there are so many pitfalls in using social media. And we like to talk about 3 specific ones. The first one we touched upon already, how do you get the customer to share the data with the insurance company? It's very tricky to build a proposition that shows so much value that customers are willing to share it. Secondly, you need to get the authorization of the platforms, so Facebook, Twitter, LinkedIn, so the world, to share their customers' data, because they own it. They are the ones who are sitting on the big depositories of data. And thirdly, even if you do, then how do you make sense of huge amounts of unstructured data in different formats? It's a very tricky technical challenge to go through it and then make sense of it from an insurance perspective. If either one of those 3 falls down, suddenly none of the system can work. If you don't get the customer, you don't have the data, platform can shut you down, you can't analyze the data, then how are you going to do it? So what we do is to try to work on all those three simultaneously by having a great relationships with the platform, communicating the value to the customers, and having the strongest technical team we can find to make sure that we can solve technical problems.
I think it's interesting that a large part of what's empowering consumers to allow companies like Digital Fineprint to use their data is that regulations like GDPR are making their data their own. Even if Facebook's been gathering it, the data is yours and you can access it, you can ask them to delete it. And it's, instead of looking at them having all this information that they're using about you, it's your own, and you can tell them what they're allowed to do with it and who they can share with it. And I think that's a large part of why people are starting to trust companies a bit more with their data.
That's part of it. Another is that it wasn't technically possible to do what we're doing a couple of years ago. And another part is what most of our competitors do. So like I said, scraping through Twitter data, Instagram data will no longer be legal next year. And insurers are now waking up to that fact and trying to look for other solutions. And we're the only ones to do what we're doing, so we keep coming in there.
How do the regulations differ between Europe and, you said the other market right now is East Asia? Yeah. How does that differ? Like, is it very complicated?
It differs by country, but it does in Europe too.
Okay.
So you have different regulations around privacy. It's going to be more streamlined in Europe from next year, actually. But again, we don't know what happens when the UK leaves the EU. I don't know if I'm going to be allowed to stay here. Who knows? I sure hope I get to stay. So if Theresa May is listening, please let me stay. I really like it here. Whereas in Southeast Asia, it's a little bit less streamlined and there are more things to do from a country-to-country basis. What we do then is try to prioritize where are the biggest opportunities. Indonesia, 250 million people. Philippines has the highest Facebook penetration in the world. In Japan, Twitter is bigger than Facebook. There's so many things we can do with social media all across Asia. So it's definitely a growth area for us.
And are you planning on expanding further?
100%.
Yeah.
Like I said, I just came back from Silicon Valley and I just came back from Australia. And kangaroos are so cute. I just have to open an office there.
It's so warm there.
Yes.
The consumers using your platform simply trading their private data for convenience, or is it more than that? Or might it be more than that?
Good question. It's definitely a first trade-off on private data for convenience, but that's not the only benefit. It can also be finding out more about your insurance needs. I can show you an example of that if you're willing, and that will illustrate talking through it. To answer exactly that question, we built something we call the Reckon platform. Pun intended. It's about what we reckon that you would need for your insurance. So if you sign up with your Facebook account, you're then able to see what specific insurance needs you have as an individual. So you're able to see what life insurance you need, what home insurance, what you need in terms of travel insurance based on the social media data that you've been gathering. So it's now looking at my Facebook platform and it's calculating what I would need based on my, for example, login data. It can see that I'm on an iPhone, and then you can figure out that you might need insurance for that iPhone. From my travel history, it sees that I'm going crazy with air miles, and because of that, there are certain travel insurance policies that would be better for me. So it's both trading it for convenience, but then I can save money on my travel insurance policy, home insurance policy, figuring out how I cover my family when it comes to life insurance. So there are so many more things that the customer can get out from it. And this is where we try to be 10x better than the next best alternative, by being able to let the customer share their data and learn more about the protection needs that they might have.
So is part of your goal also raising sort of the awareness of what sort of insurance people need, and especially people, millennials, you were saying, who might not be aware of the things that they're missing out on, like health insurance or travel insurance or car insurance? So is that part of your sort of message as well?
Absolutely. It's extremely important to us. It's very sad to see that in the UK, which is a developed economy, many young people today are walking around with a lot of risk or are living in homes that are not insured. If there was a break-in, there would be a big problem for them financially, especially for recent graduates who also have a lot of student loans in it. It's very tricky in case they were going to be unemployed for a long time. So we try to increase the awareness, and the strongest way to drive awareness today is not through the media, it's not through journalism and so on, it's through social media. It's the only way you can reach a massive amount of people quickly. So it's our duty, the way I see it, to help, especially millennials, making sure that they are not underinsured anymore. So it's part of the reason that we started Digital Fineprint.
So is Reckon something that's going to become one of sort of your products?
Reckon built with the intent of showing it to general insurance companies, so the ones that are insuring many different things, so that they can white label the solution.
Okay.
We've been making, in many cases, we applied for a core patent on our technology last year, and everything we do now is to find new use cases for that patented technology. So for example, Reckon, we're able to figure out your product needs. We've been launching a few things around lead generation, as I showed you. And we built something completely crazy that we call selfieinsurance.com that people can be coming to, where you connect with your Facebook account and then take a selfie that scans your face for signs of premature aging, and you're then able to see what kind of rate you would get from your life insurance policy.
Oh my goodness.
Based on how old you look.
Oh no.
I'll let you have a look if you want to try it out. So we have it live here. You can feel free to take a selfie with it. When I launched this at a conference with a bunch of 70, 80-year-old insurance dudes, 10 minutes later they were all sitting in the audience snapping selfies of each other. It was amazing. And they gave us a lot of attention, and it's supposed to be quirky, it's supposed to be funny. It's the kind of thing that in 10 years you might be buying life insurance in this way, but somebody needs to create that technology first, and we've already built it, so we're right here. Because of that, we want to build new use cases, we want to be able to launch new products with our insurance partners, but we don't see it as building the Digital Fineprint insurance brand out in somebody.
Is there any particular reason why you decided to go directly to the insurances rather than creating a sort of comparison platform?
Comparison platforms they're great for many things, but you can only really use it when you have a comparable product and you only compare on price. So for some simple forms of home insurance, some forms of travel insurance, it can work. Life insurance, income protection insurance, and other forms that are more complex, it's very difficult to decide what kind of comparison you want to do. And then it's dangerous to compare on price because you might not be covered for something important for your family. Because of that, we're a little bit shying away from it. We're talking to a few comparison websites, but we prefer to help insurers who are frankly doing a very good job advising customers going through that chance. Navigating their customers through life, as one of our clients are talking about. Because of that, we want to keep working with insurers one-on-one as opposed to doing a comparison play.
So the question that's been waiting, in your opinion, what went wrong for Admiral's insurance tool? And for any of our listeners who haven't heard the story, at the end of last year, Admiral, the insurer, was forced to pull plans to use Facebook posts to analyse the personalities of car owners and set the price of their insurance after Facebook said the scheme breached their privacy rules.
Yes.
Now, what went wrong for them and how are you different?
Definitely. You remember I talked through 3 main challenges and 3 pitfalls that you were asking about, Christina? And I feel that Admiral failed on all 3, unfortunately, but it did teach the industry some very important lessons, and it was an important use case on how things should not be done. The first was getting the customers to agree to share the data. There was no clear communication what the customer benefit was. It would be a little bit faster, but there wasn't any key benefit on why should I share my Facebook data. It was more from Admiral's side that, if we get more data, we can be more granular in our risk underwriting. So it wasn't clear for the customer benefit. You mentioned that Facebook has some very clear privacy rules. If they would have read through them a bit more carefully, they would have seen that what they were proposing is not allowed. You can't analyze data in a specific way that they were doing. We analyze data in a separate way. That's why we've been live for over a year without being pulled down and off the Facebook platform. And then thirdly, it's a technical challenge to analyze through all those big pieces of the data. There were many articles coming out around the time that Admiral themselves admitted that it was very tricky to go through all the data, and that was one reason that they never overinvested or went into it. So on all 3 counts, it was not possible for them to succeed. That combined with not very tender PR management at the time when it happened. That being said, on the same day that the issue happened, I was interviewed by a couple of different magazines, and up in Intelligent Insurer, Insurance Post, and a few others. We received 4 new leads from other insurance companies that want to do this, but in a good way, in an ethical way. And in a way, it validated a lot of our beliefs around those 3 challenges, and that we need to be an expert in the field and solving it on behalf of insurance companies. So it was a bad day for Admiral, but for us it was a busy PR day, and we got a lot of things done. Very interesting case.
So knowing that you're treading carefully around the obstacles that Admiral hit, how do you think that InsurTech is going to shape the industry in the next 10 and 20 years?
Wow. I'll start by saying that one of my investors, when I asked him why did you want to invest in my company, and he said, well, I make a pretty standard test with all of the entrepreneurs I work with. If they mention what they're going to do in the next month or quarter, I don't invest. Whereas you only speak in terms of weeks or days or minutes. So we only speak on a very, very short-term basis, and we set targets for what we're going to do in the next couple of days. The downside of that is that I can't predict what I'm going to do in the next 1 year, 2 years. It feels like in a distant, far future. And speaking about 10 years down the line for the industry feels very, very difficult. So I just want to caveat what I'm about to say with, I'm a short-term kind of guy. I'm very impulsive. We need to think about the short-term focus. In the next 10 to 15 years, I think we're going to see a similar development to what happened in fintech. You will have some very interesting consumer propositions. The Monzo of property insurance, I think, is going to be Trove. They built some amazing apps where you can turn on and off your cover very quickly, and you're going to be able to see many more customer proposition and innovation happening outside of the traditional insurance companies. It's going to be funded mostly by VC money from Silicon Valley, where those startups themselves might not necessarily make money, but they will be creating a lot of innovation, because if you hire the smartest designers, data scientists and software engineers in Silicon Valley and dump $80 million on them and suddenly make them do crazy things in insurance, good innovation is going to happen. And insurers are not doing that. So we're going to see innovation happening in startups that are customer facing. That innovation will be mimicked by insurance companies, and they will make their own products better. The startups that I think will survive and really influence the industry will be the ones working behind the scenes, so the ones who are not customer facing but B2B facing, doing better systems integrations, doing the boring analytics part that insurers need help with when you get into IoT, when you get into telematics data, when you start looking at wearables and health data. There are so many opportunities to do B2B work on the back end that insurers are going to need a lot of help from startups doing that. When that's happened, we're going to start seeing a lot more consolidation. So insurers will start seeing having the best access to data and analytical expertise as a key competitive differentiator, just as happened in banking, which is why banks started acquiring fintech companies. Monzo apparently has already had one acquisition offer from a major UK bank, and that's just 2 years after they started because they're so much bigger. That's going to happen in the insurance industry as well, and we're then going to see a bunch of acquisitions from very profitable insurance companies buying in the kind of talent, technology, and data that they want to get. So distinguishing it between customer facing, they will keep running around on a lot of VC-fueled frenzy. Is going to be really cool and interesting to see, but the actual work and the actual innovation is going to happen kind of behind the scenes in the B2B space.
What about the London space? I mean, fintech obviously is big here right now, but what do you see? How do you see this InsurTech sphere sort of evolving? Is it a hot place to be? Is it?
Oh yeah.
Yeah.
Just having come back from Silicon Valley, it felt like something was missing when you were there. You have really smart people, you have some crazy investors, you have a lot of money floating around and good tech talent, but there are no insurance companies. So what kind of InsurTech company can you run in Silicon Valley when there's no insurance industry there? Contrastingly, London has a lot of investors, great talent from all over Europe, and we just hope that the borders will stay open for that. And you have a lot of insurance companies to sell to partner with, to make sure that you can build something together with them. There's no other city in the world that combines all three. You could go to Zurich and work with some Swiss insurers, but that's about it, and it's a very expensive place to be. Singapore, I think, comes close, and there the regulator is really investing in startups, and I hope the regulator here will take a lesson from them to make sure that you help them innovate and work together with insurance companies based there. But there's no city in the world that even comes close to being London when it comes to being the city of InsurTech in the world, and we want to keep it that way.
Well, I think that kind of wrapped nicely.
All our questions. Thank you very much.
Thank you for having me. It's been great.
It's been a pleasure. Thank you.
And best of luck.
That concludes our third episode.
I really enjoyed that chat. I was surprised to find insurance so engaging.
Indeed. So, if you, our listeners, enjoyed listening, please do leave reviews.
Is there anything you want the inside scoop on? Or could you offer the inside scoop yourself? Get in touch if you want to feature.
Our email is charge@develop.co.uk.
Subscribe to Charge to be notified when our next episode is released.
Next time, we'll be speaking to Joyita Das from Guyana about big data and AI. See you then.